Welcome, people. Welcome. I welcome you to my YouTube channel. As you all know, this is the channel for you. If you are new into trading, even if you are a professional trader, this can also be a channel for you. But basically, I am starting with the basics of trading, and you are welcome once again. If this is your first time of visiting this channel, you can click on the subscribe button. And even if this is not your first time and you've not clicked on the subscribe button, please do click the subscribe button, because everything we'll be saying in this channel or talking about in this channel will definitely help you in your trading journey. I told you we are going to keep it simple, and we are going to keep it brief, and we are not going to make it so boring for you to understand. Joe, our number one watchword uh, in this trading class is keep it simple. There's nothing too cumbersome about trading. Forget all the plenty lines, or forget all the many things people used to say about trading. Trading is actually simple. So click on the subscribe button and subscribe to this channel, so that anytime we post new videos, you will get notification instantly, and you'll be able to follow up on the class. So without much talk, we are going to dive into the first part of our technical analysis class. Okay, like you all know, you are welcome once again, and I am going to be telling you about the basic knowledge of the market. This is what we refer to as the basic knowledge of the market. We need to talk about what does the market entails. When we talk about technical analysis, what are we talking about? And without technical analysis, you can't really do much in the market. Though there is technical analysis and there is fundamental analysis, but majorly, technical analysis will do you more good for me, actually. Don't worry, we are not going to go into that talk right now, but I am here to teach you how to be able to understand the market. So the market basically is it's based on price action. When you are dealing with technical analysis of the market is based on price action. And what exactly is price action? Is the act of making decision based on recent and actual price movement. That means you are making your decision based on the pattern you are seeing, based on the structures you are seeing, based on the arrangement you are seeing, based on the things you can see in the market. So let me do a quick rundown for you. Like, this is a 15 minutes time frame right now. Each candle that you are seeing right here, this is called the Japanese candlestick. And this Japanese candlestick, each candlestick tells a story of the price action of this particular SAU USD. This is gold. Tell a particular story of gold for every 15 minutes. That means the prices of gold for every 15 minutes you can see. And this should tell you something about price. It means price is not the way price goes up and come down, price goes up and come down. Just like I tell you, technical analysis will help you know what's up with the market and how to actually make money. You have to know the direction of the market. And this is what we are getting into right now, because when you talk about price action, you must also talk about supply and demand, or let me say support and resistance zone. Some people prefer to call it support and resistance zone, and some people prefer to call it supply and demand zone. Do you understand? But either which way, they are very correct. So even some people prefer to refer to it as a premium zone and discount zone, whatever. We are going to get into all those complex matter later in the future. But one thing you need to know is that everything about trading, you need to understand that price is moving. And you need to know the direction in which price is moving. You need to know the structure that is forming from the price movement. You also need to know the basic trend of the market. So just like I tell you, I am going to explain this to you in a very short time. We have very short time to explain this. So this is support and this is resistance. You can see this is support, this is support, and this is resistance. You can see the ones are marked with a red line is the resistance. So this is price. This is price movement going up and down, going up and down. Then definitely there is a resistance and there is a support. And you know the sweet thing about price movement is that for each time the price breaks out, for each time the price breaks out of a particular, let's say for instance, price breaks out from here, price breaks out from here, this become a new resistance, and a new support is formed. Do you understand? But we are going to get there. I'm just trying to let you know that price movement is, or should I say, the supply and demand is as a result of price movement. Supply and demand is as a result of price movement. So you need to understand that price is constantly moving. Price is not stable. Just the same way you can hear today that Tinubu say CBN is giving a particular price for naira to dollar, and tomorrow you can wake up to see 1,500 per dollar. Next tomorrow you can wake up to see. That's just to show you that price is constantly moving, and this movement is based on demand and supply. So there have to be a demand for it at a particular price for there to be there have to be a supply at a particular price for there to be a demand, and there also have to be a demand. So this resistance means suppliers have already they have gotten to this place, and people that are selling are overpowering the buyers. So you can also call this zone a buy zone, and this zone is sell zone. So the resistance can also be referred to as a sell side and a sell zone, and the support area, this support can also be referred to as a buy zone. Do you understand? So when somebody is now telling you that is in the market, I am buying, it means the person is part of the support. If another person is telling you that I am selling, it means the person is part of the resistance. So the sell causes resistance, and the buyers causes support. The buyers causes demand, and the sellers causes supply. Do you understand now? So I believe as time goes on, we will be able to understand better. So these are some of the basic movement of the market. This is the market movement. This is the market movement. Just like I referred to it here, this price movement, this demand and supply zone is not always a straightforward thing. That is the reason why I give you this is one alternative, this is another alternative, this is another alternative, and that leads us to talking about trends. So price movement leads to trends. Price movement leads to trend. And what do we call trend? It means price is not usually a moving from line A to line B. There's usually galloping. It's usually going to move upward, which we refer to as the uptrend, or it's going to be moving downward, which is referred to as the downtrend, or we are going to call it a ranging market. That means it is not going up and it is not coming down. It's just within a particular price. Is within a particular price range. Do you understand? Just the same way you hear that Naira is falling off, Naira is falling off. That means Naira is on a downtrend. So if as Naira is gaining now, that Naira to dollar now, that means Naira is on the uptrend. And these are the basics you need to know. You need to understand market. The market can be uptrend, downtrend, or a ranging market. I refer to it. I don't know, maybe you have been in other classes and they call it any other name, but these are the three movements of the market. These are the three movements of the market that you need to understand. The market is either going up or coming down or ranging. Market, and when the market is going up, this is an example of uptrend. You can see this structure right here. When the market is going up, the market forms a higher high, a higher high, a higher high. Don't be confused. I know some of you might be confused. In fact, many years ago, this was the first thing that confused me about trading, knowing how to recognize the high high. So you need to learn this, even on your own. After watching this video, you need to go to the market. I am going to show you right there on the chart. So you need to recognize when the market is making a higher high, a higher high. So when the market is making a higher high and a higher low, it means the market is in an uptrend. And when the market is making a lower high and a lower low, it means the market is on a downtrend. Are you understanding me now? So let's say this market now is an uptrend market because it's making a higher high and a higher. How do you recognize a higher high? It means when you look at this price moves from here. So let's say price is moving from here, it moves up here, it creates a higher high, then it comes down, it creates a higher low, then it moves up again. Now this high is higher than this high, and that is where we derive the statement higher high from. It means for every time price move up, the new high is always higher than the former high. So whenever you get a price movement where the new, like on the resistance, that's why I had to draw this for you. You can see the resistance bar. This is a resistance, this is a resistance, this is a trend line. Actually, we are going to get there, but there's a reason why I chose to do this example for you first, to be able to explain these things for you. So you can see right here, this is a trend line, a uptrend. This is a uptrend. So this is a up resistance trend line. This is a uptrend, also support trend line. So for every time the price move up, it is creating a higher high. That means this new high is higher than this former high. This new high is higher than this former high. And you know, these things that is coming down is what we call pullbacks. These pullbacks, for every time there's a pullback. So you see, when price makes a higher high, it's going to pull back, then makes another higher high, then pull back. Then those pullbacks are making a low. And for it to be an uptrend, for you to recognize that it's an uptrend, it will always make a higher high and a higher low. That means when a higher high is formed, the pullback is going to form a higher low. That means this low is actually higher than this low. I know you are getting me. So maybe when you watch this video and this explanation 2 times, you will be able to understand perfectly. It means for every pullback, a new low is formed. A new low is formed. This is a low. This is a low. This is another low. And these lows means these are pullbacks from the higher high. And these lows are higher than their former lows. So this was a low, this is a new low. So we call this a higher low. Now let's go to the downtrend. In the downtrend, you can see that prices makes that. I just put this as a higher high because you don't know yet if the market is going to be moving on a downtrend or not. But as well, I can delete it to avoid confusion. To avoid confusion, I can delete this particular one to avoid confusion. So let's say the market moves from here and makes a, we don't know yet if it's a lower low, but it makes a lower high here because this high, so that's the reason why I even decided to put this higher high here, because now we have a higher high. This high now, in this case, the following high is higher than the former high. The current high is higher than the former high. That is why it is an higher high. It is a higher high rather. Then for this case of a downtrend, the current high is lower than the former high. So we refer to it as a lower high. As you can see also this right here, this high is lower than this high. So we refer to it as a lower high. And you can see for every pullback of this lower high, for every pullback, a lower low is formed. That means this low is lower than this low. The next low is lower than this low, and then this low is lower than this low. You can also see in the trend line. So this is a trend line, this is a trend support, this is a trend resistance line, and this is a trend support line for a downtrend. For a downtrend, you can see you can see already this is a lower high. A lower high is formed, a lower high is formed, another lower high is formed, another lower high is formed. Then we can see the lower low formed, lower low formed, lower low formed, another lower low formed. So you can agree with me now that I know by now you should be able to identify your II. Don't worry, we'll go to the trend so that it will be easy for us. And also you can see this is a ranging market. So these are the types of market movement or market trend, or you can call it, I don't want to refer to it as market structure. You understand? But these are the market structure or market trend or market price movement that we have: uptrend, downtrend, or a ranging market. So in a ranging market, you can see no higher high is formed and no higher low is formed, all, and they are on equal. But we are going to get it. That's why I said you need to understand this basic concept of trading to be able to hit the bone of the real bone of trading. So if you don't understand this basic concept, it is going to be very hard for you in to understand the when we get to the uh should I call it the professional whatever. So you understand me. So this is it. This is the ranging market. You can see, just like I put my support and resistance. This is the support, this is the resistance, this is the trend line, this is another trend line. Do you understand? So this support and resistance, now you can see the market is not making a higher high or a higher low. It's just making a high, a low, a high, a low, a high, a low, a high, a low, a high, a low. You understand? So now let us go to the market to be able to understand perfectly what I am saying. Now this is a ranging market. You can see that the market is not. Now there's something I need to show you before. Okay, I will not show you now. I just want you to view this as, forget about all this internal whatever. Just view it like this structure that is right here. You understand? Just put it like that. Just picture it like that. So this is a ranging market. The market is not making a new high. So let's assume that we cover this part of the market. Let's assume that we cover this part of the market. I want to do something. Let's assume that we are not seeing this part of the market. So the only part of the market we are seeing is from this blue line right here to this place. So this is a ranging market because the market is not making a. I want to look for a better way to explain this to you, but you just have to imagine it because I think that is just the best way to explain to you. Now, I just want to put something out to you. This is a market that it makes a high here, then it comes, it makes a low, then it comes, it makes a high of the same. Let's assume that it's of the same, though it's not the same. When we get to the complex part of trading, you will understand better that it is not the same because there was actually a break of structure right here, but we are not going there right now. We're not going there right now. But let's just assume that this part of the market is not there. This part of the market is not there. Then let's also assume that the market actually touched it, because I don't want to take much of our time, and I'm not, and also I also want to try my best so that you guys will be able to get what I'm talking about. So the market is in a ranging market right here. It touched here. This is making a then it touched here. Then let's assume that the market also comes down to touch this place. You can see it can continue like that as a range. It can continue like that as a range. You can understand me better. That's a ranging market. I want to delete this. I want to actually delete this. So I believe that you understand me perfectly. And you can see already this is a support, this is a resistance trend line, and this is a support trend line. So let's now check our uptrend. So this in particular is a perfect example of an uptrend market, of an uptrend market. You can see the market, let's check from here. The market makes a higher high, higher than this high right here, higher than this high right here. It makes a higher high. Then there is a pullback. Don't worry. We are going to be talking about in the next class. We are going to be talking about swing structures that we are going to be talking about. So this is just the first first introduction into technical analysis. So in the later class, we'll be talking about swing structures, how to identify swing structures, the pullbacks and the rest of this introductory part to technical analysis. But so let's just take it as it is right now. This is a higher high formed right here. This is a low. This is a higher low formed right here, and this is another higher high formed right here. This is okay. Wait, sorry. I actually just want to. I made a mistake. Okay, I don't want to confuse you. I don't want to confuse you too much. Okay, so this is a higher high form right here. This is a low form right here, and this is another higher high, because this high right now, this high right here is higher than this. This is higher than this high. This high right here is higher than this high. So next, the pullback forms another higher low. So we are in an uptrend because this low is higher than this low. This high is higher than this high. So we can agree together that this is an uptrend market. This particular market is in an uptrend. So these are the things you need to know to understand that the market is in an uptrend or it's in a downtrend. As you can see, the resistance line for the uptrend. You can also see the support line for the downtrend. Don't worry, as time goes on, we will be navigating through the demand zone, because it is better to treat your support and resistance as a zone rather than just a line. You understand? But of course, as we go along with the classes, you will identify what better style of trading you are comfortable with, whether to be using your zone or to be using your trend line or to be using structures or whatever it is that you want to be using, or to base your analysis basically on fundamental analysis. You will determine that one yourself. And also, this is an example of a downtrend. As you can see, a lower high is from right here, another lower high is from right here. It means this high is lower than this high. So a lower low is from right here and a lower low is from right here. It means this low is lower than this low. This low is lower than this low. This is also the support trend line and also the resistance trend line. So that is that about the price movement and the uh, uh, the trends. And also, you already know, just like I will just run through it again. There is everything about price is based on demand and supply, and this demand and supply later creates trends. They later create a movement in the market that is either a downward movement or a upward movement, and that is the thing we just discussed about ranging market, uptrend and downtrend. As you can see, you can take a screenshot of this if you want to identify it when you see it. You understand? So, but before we go, I would like to quickly also introduce you to the candlestick. You can see, just like I said earlier on in the beginning of the class, that each of these candlestick is telling a story. It's telling a story about what is happening with price of SAU USD, that's of gold USD pair. What exactly is happening in the space of 15 minutes? You can see right here, this is a 15-minute candle. If I put it to a 1 hour, you will also see the 1 hour movement. Each candle right here is telling a story for every 1 hour. Same thing for 5 minutes. Same thing, you can see there are different time frames for it. Okay. Actually, in case you don't know the app I am using, this is Trading View. So this is Trading View. This is Trading View. Sign up on Trading View, and that is where we'll be. That is where we will be chatting, like doing our technical analysis, drawing the plenty structures and identifying the market trends, so that we'll be able to know if we are buying or we are selling, actually. So quickly, every candle, whether actually, I know you people are used to the what is it called, to the red and blue red and green candle, actually. But okay, because of my own psychology, I'm not used to it. I'm not used to it. I'm not used to the red and green candle. So that's why. So in my own trade, this black candle represents a bearish candle, while my green candle represents a bullish candle. So permit me to just quickly introduce you to candlestick. This is just an introduction. We are going to do a separate class on candlestick. Okay, so now this is a bullish candle. This is a bullish candle right here. This is a bullish candle. This is a bullish candle. You can say this right here is the wick. This line you are seeing is referred to as the wick, the wick, the wick, the wick, 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 the wick, 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 wick. So sorry, this right here. So it's referred to as the wick. Do you understand? And when it's a bullish candle, sorry, this is referred to as the wick. Also, this down part is referred to as the wick. And what is the wick? The wick means when the buyer steps into the market, they try to push the price up. They tried to push the price up, but the sellers did not agree. So they decided to, but though it was still bullish, but this week signified rejections from the sellers. It means the buyers could not entirely drive this whole thing. So, but actually there are still buyers in the market. Anyway, we are going to get into that. And for every candle formation, there is a opening and there is a close. Do you understand? So for a bullish candle, for a bullish candle, for a bullish candle, this right here is the opening. Sorry, excuse me. So we can call this the opening. The opening. We can call this the opening. This is the opening, and we can call this right here the close of the candle. The close of the candle. Close, close, close. So there is, just like I told you, there is always a opening and a close for each candle. So for a bullish candle, that means for every of these green candle you are seeing right here, every of these green candle you are seeing right here, there is a close and there is a opening. And this is usually the opening and this is usually the close for a bullish candle. So every time you see a green candle, this is everything about the candle. This is the wick. You can see this right here is the wick. This right here, this wick right here, this right here is a wick. These are wicks. These are wicks. You can see that those are wicks. So this is the upper wick and this is the down wick. Do you understand now? But this line you are seeing right here is the wick. So the opening and the close of the candle. You understand? This is just an introduction part to candle. So let us deal with a a bearish candle. So for me, my bearish candle is usually black. Don't mind me. I know you people are used to red, so I'm going to be using red. I'm going to be using red. I'm going to be using red. So don't worry. It's to make things easy for you guys. I'm going to be using red. This is not thick like I want. This is I'm going to use 3. So this right here, I'm going to be using red. This is a bearish candle. This is a bearish candle. This is a bearish candle. And for a bearish candle, like we said before, there is usually also an opening and a close. So for a bearish candle, this is the open and this right here is the close of a bearish candle. So let me just quickly type it out so that you can have an idea. This is open. This is open. Uh, this is open, and this is close. This is close. So this is open and this is close, and of course you already know that's the wick. That's the wick. This is the wick. This is the upper wick. This is the wick. That means when sellers enter into the market, they try to push the market down. You know, this is the upper wick and this is the lower wick. Also, this is a bit of so this. Okay, I forgot to label something. This actually is the body of the candle. Let me use a arrow. Let me use a arrow. Let me use an arrow rather. Let me use an arrow to be able to where's my arrow? Where's my arrow? Where's my arrow? Arrow. So this is the body. This right here is the body. So you can refer to this as the body. Body. This is the body. So this right here, this is the body of the candle. This is the body of the candle. This is the body of the candle. This is the body of the bearish candle. This is the body of the bullish candle. So for every of this candle, you can see this is the body. This from here to here is the body. This is the wick. Do you understand now? So you can see every candle has a body and they have wick. So, but there are some candles that doesn't have wick. You can see like these candles, they don't have wick. You understand? But I'm not going to talk about it today. When we go into candlestick formation and properly talk about it. So thank you for joining today's episode of our technical analysis class. I hope to see you when next. And also don't forget to click the subscribe button, the subscribe button below if you have not subscribed to this channel, so that anytime we post new videos, you will be able to get notification and you will follow up with the classes. And I believe that if you have any question, you can also drop it in the comment section if we need to treat it, and we'll quickly treat it in our next class. Thank you. I love you and I celebrate you. And I hope in the nearest future you will be a profitable trader. And please also don't only rely on these classes, and also go ahead and make your own research. And there are a lot of research online. Do your own personal studies and know how to identify the higher highs and the higher lows in the market. Know how to identify if the market is in an uptrend or a downtrend. Like I can quickly show you right now, this particular market is in an uptrend. As you can see, there is a higher high right here, another higher high, another higher high, and for every pullback, you can see the higher lows. You can see the higher lows, higher lows, higher lows, higher high. You can see the another higher lows. You can also see another higher high, like that, another higher high, just like that. See, so this particular market now is in an uptrend. So don't mind this just this little thing. I just uh actually cut out for you. I'm just trying to make an example. Do you understand? The market is way, 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 way more. I will not say more complex than that. It's not complex. So if you understand this basic, you'll be able to understand what I am saying perfectly. Do you understand? So I think I'm trying to look for a perfect downtrend for you guys so that we will be done with this. You understand? I'm trying to look for a perfect downtrend, though this market has been in an uptrend for a while. So let me look for a perfect downtrend. I think USD, AUD, JPY. Let me see. AUD, JPY. Even AUD JPY has been in a perfect uptrend. You can see I will be able to identify if this market is in an uptrend. You can see there's a higher high, there's a higher low, there's another higher high, there's another higher low, then another higher high is forming already. Then definitely there is going to be a pullback to form another higher low. Do you understand now? So I believe that with these few examples, you can be able to identify uh let me check euro USD. You can be able to identify a uptrend market, an uptrend market, an uptrend market. I want to show you, okay, this is a perfect example of a downtrend. This is a perfect example of a downtrend market. You can see from here, there is a higher high formed here. This is a low formed here. We don't know yet, but then there is a pullback right here, and there is a higher low formed. It means this low is actually lower than the former high that was formed. Then it pulls back to form a lower low. So this low is lower than this low that was formed before. So you can see also this right here also formed another, then the market moved up again and formed another higher low. Then the a lower high rather. This is a lower high from this, then another lower high from this, then a lower low also with the pullback before the market now restructure. So in the next class, we will also be talking about the break of structures, the change of characters, and the rest, and the rest, and the rest, and the rest, and the rest. You understand? Do have a beautiful day, and make sure you are studying, and I wish you well, and I know you'll be profitable. Thank you. God bless you. Amen.